Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ATLASSIAN CORP quarterly report. ATLASSIAN Corporation offers a diverse range of businesses and services that cater to various needs of organizations worldwide. Its product portfolio includes collaboration software such as Jira, Confluence, Loom, and Trello project management platforms like Jira Service Management and Jira Align Source Code Management, with Bitbucket developer tools, including Compass and Rovo's AI capabilities, workforce planning apps like Talent and Focus Security Threat Detection, and Response with Guard. These services aim to enhance productivity, streamline work processes, and improve team collaboration across various teams and departments. ATLASSIAN Corp's stock price decline. A year of disappointments and uncertainties over the past year, ATLASSIAN Corp's team stock price has plummeted by 22.63%, largely due to a series of disappointing events and uncertainties that have raised concerns among investors. The company's financial guidance, executive changes, and strategic decisions have all contributed to this decline. In August 2024, ATLASSIAN's stock took a hit after the company provided lower-than-expected revenue guidance for fiscal year 2025. This was compounded by the departure of Chief Sales Officer Kevin Egan, sparking investor concerns about future growth. The following months saw further declines, with shares falling by 11.7% in April 2024 due to growth concerns and a leadership transition. In May 2025, ATLASSIAN reported its slowest revenue growth in years, leading to an almost 18% drop in the stock price. Analyst ratings, insider selling, and significant acquisitions further fueled investor apprehension. The company's decision to end sales for its data center product, make large acquisitions, and cut customer support positions added to the negative sentiment. These events, combined with broader market volatility and a high valuation, have contributed to ATLASSIAN's stock price decline over the past year. As investors weigh the impact of these decisions on future growth, it remains to be seen whether the company can recover from this downturn. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: cloud and enterprise sales, subscription services, productivity software sales, and cloud deployment option revenue growth are the key factors driving revenue growth. The Americas region has seen a significant increase in revenue growth, with other regions also experiencing notable growth. Revenue decline drivers. On the other hand, hardware sales decline, professional services decline, and the end of life of data center deployment offerings have contributed to revenue decline. Additionally, competition from established companies and the emergence of new technologies, such as AI, have also impacted revenue negatively. Net income and profit margins. A decline in performance. The financial performance of a company has experienced a decline in net income and profit margins. The decrease in net income is attributed to several factors, including the impairment of investments, higher effective tax rates due to alternative corporate minimum tax, IRA, potential tax disputes, and increased taxes from U.S. or foreign taxing authorities. Profit margins have also decreased, primarily due to reduced cash flows and lower overall profitability resulting from IRA tax provisions. Additionally, adverse impacts on results of operations from Pillar 2 rules and potential tax disputes have contributed to the decline in profit margins. The only stable aspect of the company's financial performance is its gross margin, which remained at 82% in both 2024 and 2025. The decrease in net income and profit margins indicates a decline in the company's overall profitability, highlighting areas that require attention for improvement. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash provided by operating activities has increased substantially from $80,492 in 2024 to $128,715 in 2025. This increase suggests that the company is becoming more efficient in managing its day-to-day operations and generating positive cash flow. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes. Despite minor fluctuations in long-term debt, the total liabilities have decreased by $354,752. However, new debt issuances, such as the issuance of senior notes worth $1 billion, have increased the overall debt level. On the other hand, interest expenses have increased from $7,318,000 to $8,600,000 $636,000, indicating a rise in financial obligations. The company's financial performance varied across different segments and regions in 2025 compared to the previous year, 2024. The Americas region showed significant growth, with a 21.4% increase in the United States and an 18.7% rise in other Americas. In contrast, Europe, Middle East, and Africa, EMEA, also experienced growth, with increases of 20.6% in Germany and 21.1% in other EMEA. The Asia-Pacific region saw a modest 19.8% increase. However, some regions underperformed. The United States witnessed a decline from $168.8 million to $134.2 million, while India's revenue dropped from $34.9 million to $30.6 million. Additionally, all other countries experienced a decrease in revenue, falling from $16.4 million to $14.8 million. Management is expressing a cautious optimism about the company's outlook. They emphasize the need for growth through expanding customer bases and adopting new products, as well as transitioning to cloud offerings. However, they also acknowledge potential challenges such as revenue growth rate sustainability, profitability, global economic volatility, and evolving regulations. Key strategies include focusing on cloud offerings, expanding beyond software developers, adapting to changing technology and regulations, managing indirect channel distribution, efforts management, is aware of external risks including government contracts, market price fluctuations, and regulatory changes. They stress the importance of maintaining strategic relationships, adapting to changes in technology, and protecting the company's brand. Overall, management is prioritizing growth through diversification and adaptation, while acknowledging potential challenges and risks. The company's financial strategy involves investing in its growth through a share repurchase program, where it aims to buy back up to $3.5 billion of Class A common stock. This program indicates that the company is prioritizing internal growth over dividend payments, instead choosing to retain earnings for business development and expansion. Supply chain concerns. A growing issue. The company's financial summary highlights several concerns related to supply chain disruption. Specifically, there are worries about the reliability of solution partners in paying on time, which could lead to cash flow issues. Additionally, the risk of reputational harm due to export control violations or corruption is a significant concern. Furthermore, the potential for solution partners to suddenly cease marketing offerings without notice poses another challenge to the company's supply chain stability. These concerns underscore the need for careful management and mitigation strategies to prevent disruptions and maintain a stable supply chain. That concludes the financial summary for ATLASSIAN CORP. Feel free to comment below, and I will be happy to answer them when possible.